It's 2023, and even the experts are still debating whether it's better to buy or sell a home. So in this video, I'm going to break it down for you, and I'm not going to be using any math or complicated equations. I went onto YouTube to prepare for this video and looked for what else is out there on this topic of buying versus selling. And one of the best videos that I found was from somebody who I think is great, Graham Stephan. He's very popular on YouTube for financial and similar types of topics. However, even I, as an experienced financial advisor, following his mathematics was confusing at times. So what I'm gonna do in this video is I'm gonna break it down and make it super simple for you. Hi, I'm Ken Majmudar. I'm a CFA. I'm a licensed attorney, though I don't practice law anymore. And I love teaching and explaining to people different things that are complicated, that they find complicated on the financial topics. Besides watching Graham Stephan, I also watched a number of other videos, and one of those videos, actually the most popular video on this topic, was by Grant Cardone, who's very popular on YouTube. And my jaw dropped when I saw his video, which has over 6 million views, because he said that homes aren't for people to live in. Homes are for banks to lend against. And you know, Grant is a master marketer, not quite the style that I personally love, but when I heard that, my jaw dropped, because I think that there was a little bit different than my perspective on what homes are. As an experienced financial advisor, I've worked with and I've talked to thousands of clients over the years. And for a lot of families, especially regular, hardworking families in the United States, I've heard their stories and heard their concerns and heard their challenges. And the reality is, from my experience, for the average American, their home is their most valuable asset. So to say that nobody should buy or rent a home, I think would be potentially doing a disservice to a lot of people. Now, this doesn't mean that everybody should run out immediately and go buy their houses. In fact, there's a lot of factors to consider, and in this video, I'm going to break down these factors for you. Like everything else in life, there's pros and cons, there's trade-offs that need to be considered, and I'm going to break down these trade-offs. And so what I'm going to do in this video is I'm going to give you the pros and cons of buying. Now, I noticed that there's a number of other videos on this topic, but I would say that a lot of the videos that I viewed, what their approach is to do a hypothetical calculation. So it's very much walking people through saying, like in Graham's video, hey, if you're gonna buy a $500,000 house, what are how to do that calculation versus renting. But I wanna say that even as an experienced financial person, having so much math or so much calculation-oriented content, which is what I saw in a lot of these videos, I think makes it a little harder to understand. And so what I'm gonna do is I'm not gonna use any math. I'm not gonna try to do any calculations. Instead, I'm gonna try to give you an intuition, a clearer understanding of the factors, because I think that sort of an intuition will serve you much better when you're trying to figure out whether to buy or to rent. So without further delay, let's get into the pros and cons. Let's start with buying first. One of the biggest pros with buying is that you get to build equity in your asset, which, like I mentioned, for many Americans, their home is their biggest asset because they're not big in terms of saving for the stock market and in other ways that you can actually build wealth. And so what ends up happening is that your home ends up being a forced saving vehicle. Now, why is it that for many Americans, their home is their biggest asset or their biggest source of wealth? And the reason for this is that there's two ways that you build wealth when you own an asset like a home with a mortgage. And those two ways are, number one, part of your payment every month goes towards reducing the amount that you borrowed. So that's building equity through what's called paying down your mortgage. And the second source is the increase in the value of the home going up. That is due to prices going up or inflation. So one of the reasons why home ownership works out so well for so many people in the long run is because slowly they pay down the mortgage over time. And in general, over time, house prices do tend to rise. And because of that, the equity that they build up ends up becoming quite valuable over a longer period of time. Now, while it's true that this tends to happen, it's not always the case that home prices go up. And you don't have to look very far to know that, because in roughly 2005 to 2000, 2011 or 12, there was a real estate bubble. And starting in 2007, home prices really went down pretty rapidly. So a lot of people, especially folks in maybe their 20s and 30s today who are younger when that happened, they have vivid memories of houses getting foreclosed and things like that. And so many of those maybe are reluctant to own for that reason. But another time when house prices went down as a whole was in the Great Depression. And that was more of a deflationary time when house prices went down because the whole economy was shrinking. So remember that whether it's something like a depression or whether it's something like the housing bubble, it's not guaranteed that house prices go up in the kind of short to medium term, but in the long run, they do tend to go up. And so even though sometimes they don't, on the whole, while it's not 100% guaranteed, it's a pretty good bet that over most 10 plus year periods of time, home prices do tend to go up. And so you can benefit as an owner. Another big benefit of buying versus renting is that you really get to live somewhere where you want to live. There's many neighborhoods, great school districts, great areas where it may not be that easy to find a rental home or to find the exact home that you're looking for. And so for that reason, you may want to be an owner and basically pick where you want to live without any limit. Now remember that only about 44 million units are rental units, so the rest are not available in the rental market. So that could limit you if you're looking for a particular type of home or a particular neighborhood where there might not actually be that many choices. In those areas, you may need to own or you may want to own. So that's a second reason. A third reason, or third pro for potentially owning rather than renting the home, is that you get to live in whatever type of house you want. You get to change it to whatever you like. You don't need anybody's permission to add on an addition or increase space or paint the walls or do whatever you want to make the house conform to whatever you're looking for. And if you're super ambitious, obviously, and I've done this a few times, I've built 2 homes. I've actually bought land and built a home from scratch with the help of professionals, architects, contractors. But if you do it the right way, you get exactly what you want. So another big benefit of owning, which is related to the first point that I mentioned, is that if you buy a home, you can get a fixed rate mortgage for some period of time. It could be 5 years, it could be 7, 10 years, or it could be 30-year mortgages, and I'm talking from a context of the United States. Then that mortgage, typically if you fix it, the cost of the mortgage is not going to go up. So that gives you a certain peace of mind that you have a significant part of your expense structure for your housing that isn't going to go up in the long term. So if you're going to stay somewhere for a long time, that could end up being a benefit. Of course, if you own your home, there are other expenses such as taxes, insurance, maintenance that can and will go up relatively regularly, just along with the increase of prices and inflation. But still, it's a big benefit that you lock in your mortgage and you don't have to worry about that mortgage payment increasing. And the other benefit, which is actually happening now, is we're in a time when interest rates have gone up recently. And so if you were lucky enough to lock in your mortgage back when it was lower, now you have that low payment, and that's going to look very attractive in a time when interest rates are going up. And on the other hand, it's still not too late to buy if you want to, even when interest rates are a little higher like they are now, because the reality is that if you buy now, and assuming prices have already adjusted where interest rates are, in the future, if interest rates ever go down again, you're going to be able to refinance, and the value of your property is going to go up that much more because a certain level of payment becomes more affordable to new buyers coming in. Now, another benefit of owning is that you're creating an asset that you can actually hold on to, even if you don't want to continue to live in the home any longer. So what do I mean by this? If you decide to move, basically you can keep that home or that property and turn it into a rental property. And if you've already financed it, like I mentioned, with longer term fixed rate debt, then that becomes another asset, not just the house itself, but the fact that you can finance it and pay a lower mortgage payment than you would be able to do. So that could be a really good option, and that option won't exist for you unless you get into the game by owning a property. The other thing that people do when they create wealth that way is, and Graham Stephan talks about this, is that if you're willing to find a bargain home, that is the home that maybe doesn't look so great right now, but you see the potential of it and you're willing to put in the time and the effort, then you can actually basically improve it. So you get a bargain, you improve it, and you increase the value. So if you're willing to buy a home at a discount and improve it, buying actually lets you create instant equity. And I can say from personal experience that I've done this several times in the past. Actually, the very first property that I bought was in New York City, and that was a condominium. So that wasn't a matter of really improving it, but the fact that I owned it, I took advantage of the mortgage pay down, and rates were going down at that time. So ultimately, when I sold it 5 or 6 years later, because I needed the money, I wish I actually could have kept it, because that property is valued much, much higher right now. And I'm going back now about 25 years when I bought that first property. But I had to sell it because I needed the money to buy my second house where I wanted to live. But nevertheless, it benefited me a lot to be an owner rather than a renter during that, roughly 6-year period of time when I lived in that apartment in New York City. So I mentioned my first apartment, which I owned, but the second one that I bought when I sold that one was I bought a home in New Jersey. And at that time, in that area, probably the average house was going for, say, $500,000. But I found one that didn't look as good, so it wasn't as appealing. In fact, I can say that my wife didn't really love that house, but I saw the potential in it. And in that time, I was able to negotiate for that house to buy for $380,000. Now, I came up with a plan to redo the kitchens and the bathrooms and everything, and so I ended up spending about $70,000 to do that. So a total of $450,000. Well, that home then ended up becoming valued at around the average price of the neighborhood, which was around $500,000. And so ultimately, when I sold it, I think that I offset some of my costs. And in fact, I would say that overall, when I add up all the homes that I've owned, I've lived in, and I've used, buying has actually helped me to probably live essentially for free when you factor in the value that I ultimately got back or I created through owning the home in the first place. And that's in addition to all those other benefits of not having to ask somebody when I wanted to paint the walls or really turn that home into exactly what I was looking for. So another big benefit is that owning a home and having the equity and the ownership, which is what I've been talking about, actually is also a good way to build your credit, which can help you in the future. A lot of people probably underestimate how important credit is, building good credit. And even myself, I didn't actually understand that. And there was a time when, I was a little perplexed, like, why is my credit not higher? And it turned out that I didn't have enough credit cards. I had business credit cards, but I didn't have personal credit cards. And so they were, believe it or not, they were actually dinging me for not having credit cards. So when I realized that, I went and applied for some credit cards, and now my credit's excellent. And so the same thing with home ownership, because what lenders want to see is a history of being responsible and paying credit down, and also not using a lot of the credit that you have. So the more credit you have, the less you use, the more frequently you show responsibility, the more your credit builds. And credit is extremely valuable because when you find an asset, a house, or it could be anything, you need a car. When you have great credit, there's going to be a lot of lenders that are going to compete to give you money at a low rate, and you can use that money to do better things with it. And so even after taking into account the cost that you have to pay that lender, you're going to come out ahead. Not only does home ownership give you the opportunity to build credit, but it also can be beneficial to own a home for access to financing for other purposes. For example, many people at some point in their life, they think about expanding or buying or starting a business. And so, for example, many SBA loans, or even you could tap into the equity in your home through a home equity line of credit. And that money that you can access through the equity that you build up in your home can be very helpful. And I know that there's probably a number of very famous companies that were started by founders who in the beginning probably mortgaged their house to come up with the startup capital. Now, this point, I have to say, should come with a warning, because a good number of people also end up losing this way. If you end up borrowing against your home and then you do a business that doesn't work out, and obviously many businesses do fail, then people end up in a bad situation where it can lead to personal bankruptcy. So you definitely want to avoid that. But the reality is that unless you're in the game and unless you own an asset, for example, a home, you're not you don't even have the option to borrow or to tap into that money in many cases, because lenders, including the SBA, they want to see collateral. And so by having a home, by owning a home, you are going to be building up that collateral, whether you ultimately use it yourself for your own retirement benefit or you use it for one of these other reasons. And another big benefit of owning a home, so this is another pro, I think it's my number 8 pro, if I'm keeping track right, is that a home is one of the few assets that most regular people can get what's called leverage on, i.e. use debt to buy the asset. And so everybody's probably heard at some point, you hear this in like Rich Dad, Poor Dad, that the wealthy people, they use other people's money, which is also known as leverage, to benefit themselves if they know what to do with that money. So obviously, if you're a young person, you probably don't have a lot of assets. And so if you find the right home, you have reasonable credit, or you find something that's a real bargain and you can maybe get someone to come in with you for that instant equity that I mentioned, this is a great way to get in the game and to basically have an asset that may appreciate. You can pay down the mortgage, you can borrow against, and then as the value goes up, maybe because you improve it or because overall you pay down the mortgage and the value goes up over time, that could end up being a benefit, because most regular people, even you might have a great business idea, but it's really hard to attract someone to give you money against that business idea. Very few people in general will be lining up to loan money to somebody to back up a business idea. But on the other hand, because real estate represents a tangible asset and valuable collateral with a long history, there's a lot of people that will line up to lend against real estate. Now, I've covered pretty thoroughly, I think, the pros, so let's now jump to the cons. So what are my cons for home ownership? What are the arguments against owning a home? Well, number one, you have to manage all the details involved with home ownership, and that's not for everybody. So, for example, this is just the basics, but you have to, if you own a home, it's a very valuable asset, you're going to have to arrange for insurance. That requires a little bit of time, shopping around. Maybe you have a trusted broker, but you need to have insurance on that home at all times. You got to make sure that the insurance gets paid. Similarly, I've owned multiple homes in my life. There's always some kind of thing breaking down, some sort of maintenance that needs to be done. And you know what? There's no one else to call to handle those things for you. So all of that takes a little bit of time. There's a little bit of hassle involved in that. Similarly, you got to keep track of your expenses and your taxes and your mortgage, and you have to make sure that all those payments are made. And if they're not, that can ding your credit, or that can cause hassles or fines down the road. So that requires some skills and some cash management and some time. And you know what? That isn't for everybody. So if that type of activity would not, be for you, you'd feel overwhelmed or anxious about it, then for you, maybe homeownership may not be the right fit. Another issue with owning versus renting is that, hey, things do wear out from time to time, and you are the one that has to be responsible for them. So, as I mentioned, but sometimes bigger items wear out, roofs go bad, there's other kinds of things that happen. Some basements flood, some areas flood. So there's all of these extra things that you're ultimately responsible for as an owner, because if you don't handle them, they hit you in your pocket directly. And as I alluded to, a third kind of con is if you miss any payments. Like I said in the pros, home ownership can build your credit. Well, if you start missing payments or you're not able to make payments, that can really ding your credit. And it probably hits your credit as a homeowner much more than if you are a renter in most cases, because banks who loan money, they're going to report to the credit bureaus much quicker than any sort of landlords would. So that's another potential negative if you're not able to stay consistent in making your mortgage payments. Another con of home ownership is that, hey, you're going to have to tie up a decent amount of money into your home. It's going to be stuck in your home, even though it's equity and it's building up, and ultimately if you sell your home, you can get it out. For the most part, that money is stuck in your house and it's not accessible to you. You can't use it. You can't use it to earn money on it. So unless you sell your home or you refinance it and get more out of that refinancing than the amount that you originally borrowed, you're going to have wealth that's being created in your home, i.e. the equity that's building up since you're paying down the mortgage and hopefully the value of your home is going up. But that equity is not accessible to you. And the Graham Stephan in his video talks about opportunity cost. I don't recall that in the video he really explains what that is, but it's really related to this concept that I'm talking about, which is, hey, if you put 20% of the value of your home in your home, hey, maybe you could have been doing something much more profitable with that money, right? Maybe you could have started a business that could have been wildly successful, or maybe you would have had other investment opportunities that could have been very successful. But on the other hand, for some people, it's a good thing that they're tying up this money into their home because if they, for example, have trouble managing money, I mean, a lot of people struggle with it. They struggle with controlling their expenses. They struggle with, keeping track of what they're spending or holding on to money, or really they may not have the financial skills to be particularly responsible with their money. And so for those people, actually, generally home ownership works out a lot better because it's sort of a forced saving plan. So if you're really good with money, like some of these social media people who can generate high returns through marketing or whatever, then for them, it could be a negative to own a home and tie up that capital if they could use that capital somewhere else to earn, much, much higher rates of return. So related to that negative, here's my next con of home ownership, which is that the reality is that real estate is an illiquid market, right? And what does that mean? That means that it takes quite a long time, and sometimes it's quite difficult depending on what's going on in the economy or with interest rates, to sell your home and turn it back into cash to get your equity out. So that effort, that process of selling, unless you're in a very hot market, that takes time, that takes effort. It can involve expenses and commissions. And for some people, that is overwhelming, it's daunting, it's too time consuming to really deal with all of that. It can be, cause anxiety. So, and when you want to market a house, you have to generally work with a realtor. You'll have people coming through your house, looking at everything, kind of judging it. So for some people, that is very uncomfortable. And so, the reality is that that's part of being an owner. When you want to sell, you got to go through that. So, and another inconvenience is that when you want to sell, a lot of times a realtor will come in and say, hey, I could really do a good job if you would just do this, spend time and money, repainting things, make things look nice, make my job easier. And so you end up having to spend time and money when you want to sell to make the house sell. And that can be inconvenient, annoying for some people. So that's just something to know, that is what you're signing up for if you do decide to house in most cases. And as I mentioned, another con is that while prices do generally go up over the very long term, they do tend to go up because of inflation. But there are counterexamples. And so, for example, right now there's a generation of people who saw their parents' houses get foreclosed on in 2008 and 2009 when that last real estate bubble crashed. And some of these folks, they're reluctant to own their own houses. They saw what happened to their parents when they were kids. And in many cases, they're probably somewhat scarred from that experience. And, they don't necessarily feel like owning a home on their own is probably something that they're, willing to sign up for. As a corollary to this, some of these people are still really mad. They're mad at Wall Street, which is why you have, I think, probably today, you have this phenomenon of Wall Street bets, and some of those same people who are quite mad at those institutions that they thought were responsible for what they and their parents went through during the last financial crisis. Another con of owning a home is that you're more tied down. So it's not so easy to just sort of get up and leave. As I mentioned, it takes time to sell a home. It takes time to do all the work and stuff, and so you're much more tied down with owning a home. It takes a lot longer to kind of get out of that commitment than if you just rent. You're much freer that way.